Hello and good morning, everyone. Welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Markets Analyst at FXPesa. So today we'll be talking about the current recovery that we have seen showing signals in both gold and silver after witnessing a big sell-off over the last 3 weeks. So we'll also be looking into what are the key market highlights as of this morning, and then once we cover that, hopefully everyone will be able to trade from an informed perspective. So remember, as always, these sessions do not constitute of any form of investment advice. They are not a recommendation to trade. So you should always do your own due diligence. So key point to notice as of this morning is that Robert is not available today. He's currently on leave. So that's why I'm handling the Wednesday session. So hopefully by next week he'll be back. So I can already see Hawkeye in the house. Good morning. Limo KV, thank you for joining. Chinagram FX, thank you for joining. So let's continue with the session. Remember to like, share, and subscribe. And right away, we can jump into the economic calendar, see what events transpired in the market as of this morning. So first things first, we know that yesterday we covered the early morning trading news where the UK jobs came in weaker than expected, but 28.6k for number of employment claims was a big spike, and this led to unemployment rate rising to 5.2%, up from 5.1%. Average earnings index, or the rate of wage growth, slowed down to 4.2%. Then later in the afternoon, we had Canadian CPI inflation data, where there was 0.0% change over the month, which was an improvement from the prior reading of negative 0.2%. Actually a worsening because prices are supposed to be reducing. But then for trimmed CPI year over year, this is the Bank of Canada's favorite measure of inflation. We saw 2.4%, which beat the expectation of 2.6% and the prior reading of 2.7%, which means that the Bank of Canada is getting closer and closer to its goal of achieving 2% target. So remember, when inflation is at 2% target, the central bank is much more comfortable. So there has been some good progress. So if you look at the sequence of movement for the last 5 months, from around 3.1%, inflation has been able to drop month over month, all the way down to 2.4%. So it's more likely that the Bank of Canada will be achieving the 2% target. And that would mean taking interest rates back to where they were before COVID. So more interest rate cuts means a weakening of the Canadian dollar. So fast forward, we remember we are still in a period of time where there is the extended Chinese holiday or the Spring Festival, and that means that Chinese markets are very illiquid. Then we have the interest rate decision that we had earlier this morning at 4 a.m., and this is coming from the Reserve Bank of New Zealand. So they decided to hold interest rates steady at 2.25%. But then during the press conference, there was a mention that the Reserve Bank of New Zealand could go for a rate hike later in the year. So as you can see, one of the key highlights on Forex Factory News, Reserve Bank of New Zealand's Breman, that's the chair, potential interest rate hike by year end. So the threat of hiking interest rates by the end of the year is expected to have some impact in the markets. So while maintaining interest rates at 2.25% is significantly low compared to the other central banks, where the only other central banks mirroring that is Bank of Canada and the ECB, 2.25% and 2.15%. On this other side, for Japan, 0.75%, we expect rate hikes later in the year. Whereas for the Swiss franc, they cut to 0% because their currency was in too much demand. So clearly, we should be looking at the reaction from the New Zealand dollar compared to other currencies, which we'll do later in the presentation. Then for the rest of the day, Of course, we have the inflation data from the UK, which came in at 10 a.m. So the prior reading was 3.4%, and we saw inflation dropping sharply to 3.0%. That's a huge 40 basis point drop. So it came in as per expectations. So if you look at the last couple of months, I would say within the last 5 months, there has been a net drop in the level of inflation in the UK from a top of around 3.8%. That was the top last year. And then we started seeing significant drops, and now we are at 3.0%. So this is a significant progress, but still quite a distant from the Bank of England target of 2%. So core CPI came in at 3.1%, missing expectations of the 3.0%, but still quite a drop from 3.2% in the prior reading. So producer price index for input and output, we had 0.4% as expected. Output even dropped further than expected by 0.0%. Then retail price index came in at 3.8% as expected. So clearly, we are seeing the level of inflation improving in the United Kingdom. So what did trading economics have to say about it in finer details? So UK consumer price inflation eased to 3.0% in January 2026, down from 3.4% in December, and in line with market expectations. This marks the lowest annual inflation rate since March 2025, primarily driven by softer increases in transport and food prices. Transport costs rose by 27% year-on-year, slowing from 4% in December as fuel prices fell and airfare inflation moderated. Meanwhile, food and non-alcoholic beverage prices increased by 3.6%, down from 4.5% the prior month. Inflation also eased in housing and utilities, 4.5% versus 4.9%, and recreation and culture, 2.6% versus 2.7%. However, price growth in restaurants and hotels accelerated to 4.1%, up from 3.8%. Core inflation, which includes more volatile components such as food and energy, declined to 3.1% in January, its lowest level since August 2021, suggesting underlying price pressure are gradually moderating. On a monthly basis, consumer prices fell by 0.5%, reversing a 0.4% increase recorded in December. So this is a very sharp drop in consumer prices from 3.4% to 3.0%. So clearly indicating that the UK economy is moving in the right direction. And as soon as they get closer to 2%, then we should be seeing more pressure on the Bank of England to continue cutting rates, which would likely mean a much weaker pound. But then if you look at the stock market, it's celebrating a potential rate cut. And as a result, we had a very big spike in the FTSE 100 index, both yesterday and today, a much smaller spike, but still a break into newer all-time highs. So still on the calendar, later on in the day, we'll be having the housing price index data for the UK at 12:30 p.m. Then we'll be getting core durable goods orders and durable good orders for the US economy at 4:30 p.m. Then later on, we'll be getting building permits, housing starts. That is still at 4:30 p.m. Then later on in the evening, we'll be having the main event of the day, which will be the Federal Open Market Committee meeting minutes detailing what happened in the last meeting. So this is usually a big market mover for gold, silver, US equity indices, and all US dollar pairs. So it's one of the events to keep in track at 10 p.m. Then the Reserve Bank of New Zealand Governor Breman will also be speaking at 10:10 p.m. later today. So ahead of tomorrow's session, we'll also be having serious job data at 3:30 a.m. So make sure you are up early if you want to track the changes that happen in Australia's job market report and how it affects the Australian dollar pairs. Then for the rest of the data, it will be presented during the next live session, which I will also be holding at 11 a.m. tomorrow. So other than that, trying to see if there's any other key highlight in the market. UK producer inflation lowest in 7 months. European stocks set for higher open. Australia quarter forward growth edge is higher. Gold rises after 2-day drop. Brent steady after US-Iran talks, and Japan export growth at over 3-year high. So one key highlight here to notice is that Brent has been steady after US-Iran talks. But then if you were trading yesterday, then you noticed the extreme volatility that happened later in the afternoon, mainly following the announcement about Iran. So what actually happened, Iran's foreign minister mentioned that we have reached an understanding on main principles with the US. So immediately after releasing that piece of information, there was increased activity in gold, silver, US equity indices, as well as oil. And for WTI, there was a sharp drop because, as we had talked earlier yesterday, positive developments in the negotiations would mean that investors remove a premium on the price of oil. And that actually happened yesterday. So we had that sharp drop. So today it seems like the prices have stabilized and we are seeing some form of recovery, which we'll also be covering later in the presentation. So on the Fed side, now we have how many days? 28 days to the next Fed meeting. And still the market is pricing in a 92.1% possibility that the Fed will not be cutting rates, but rather holding rates at 3.5 to 3.75%. And for those who are new, you should know that the next FXPesa, the next bullish banter event will be happening on this Saturday. It's free of charge. It will be at ALX Westlands. So make sure to sign up for the event. So if you missed the previous one, we shared a recorded debate live on the on the Bullish Banter podcast. So make sure to check it out. So the Bullish Banter podcast is available on all podcast platforms, but you can also find it on FXPesa YouTube channel. So in the latest episode, we hosted Derry, a top economist in Kenya. Make sure to check it out. We have covered quite a good number of topics so far this year. And we are also celebrating breaking over 100 episodes since the podcast started. So make sure to check it out and purpose to attend on Saturday. So the link for the registration is here. Just fill in your first name, last name, email address, and phone number. Then you'll get the details to the event. ALX Kenya, the piano. It's on Brookside Drive, Nairobi. So make sure to purpose to attend. I will be sharing the link in the comment section. So there you go. So just checking to see if there's anything I missed. So from Market Screener, technology stocks are still struggling to recover from their malaise. Fears of disruption from AI continue to weigh on sentiment, and investors are seeking shelter. So much that some defensive names are now commanding higher valuations at the mega cap technology groups. It made for a difficult session to read yesterday. European markets closed higher. CAC 40 in France was up 0.8%. DAX was up 0.72% for the Euro Stoxx 50. After opening around flat and briefly slipping into negative territory, on Wall Street, indices fell sharply at the open, with the Nasdaq down more than 1% before rebounding to finish mixed plus 0.1% for the SP 500 and negative 0.1% for the Nasdaq. So clearly, yesterday was a pretty volatile day. But one key thing to notice is that the Magnificent 7 stocks are in the red for the first time this year. So since the year opened, we are seeing the Magnificent 7 stocks, or the top tech stocks, which are doing a lot of capex or capital expenditure into AI, being in the red since the year started. So concerns about AI-driven disruption continue to cloud sentiment. Meanwhile, the massive capital expenditure programs of the technology giants are no longer seen as a sufficient reason to buy the stocks. We saw this during the latest earnings season in late January and early February. All of them flagged a significant increase in capex for 2026, and the market reaction was broadly negative. Bank of America's latest fund manager survey, published this week, confirms the shift in mood. One third of investors believe companies are investing too much, the highest proportion since the survey began. The result of this disenchantment is a marked compression in valuations. Among the mega caps, two names have suffered in particular: Microsoft and Amazon, which are down 18 and 13% respectively since the start of the year. Microsoft now trades on 23 times earnings and Amazon on 26 times. Both stocks are at their cheapest levels in a decade relative to their average price to earnings ratios over the past 10 years. Yet, despite technology's weakness, the indices are not falling. The SP 500 has been trading between 6,800 and 7,000 points for the past 2 months, a range of roughly 3%. This is not a broad-based sell-off, but rather a rotation into more defensive sectors. As we recently noted, the trend began in late October. Among the beneficiaries are utilities and consumer staples. Walmart, for instance, is up 16% since the start of the year. The group recently surpassed a market capitalization of $1 trillion and is now more highly valued than all of the Magnificent Seven except Tesla. At present, Walmart offers something of the best of both worlds. Its valuation resembles that of a tech company, reflecting its growing competition with Amazon through the expansion of its e-commerce platforms. At the same time, it remains a defensive stock in a market searching for business unlikely to be disrupted by AI. The US retailer's share price performance has been striking, and the bar now appears set high as Walmart reports earnings tomorrow. Today, the European session will be driven by results from Euronext, Vinci, BAE Systems, Orange, Grenco, and Carrefour. In the United States, Booking Holdings, Analog Devices, and Occidental Petroleum are also due to report. So, elsewhere in the news, Christine Lagarde is expected to step down as the president of the European Central Bank before end of her term in October 2027, according to the Financial Times. So this is quite an alarming statement. So if she resigns ahead of October, when her term is supposed to end, then that could change a whole lot about European monetary policy. So especially if we are going to get another person who is highly spoken. So Ukrainian and Russian negotiators concluded the first day of a new round of US-sponsored peace talks in Geneva on Tuesday, as President Donald Trump, the 47th President of the United States, renewed pressure on Kiev. So lastly, also in Geneva, Iran and the United States reported progress in their negotiations yesterday, prompting a modest pullback in oil prices. So I believe those are the key highlights for the day. And one last thing is a visit to the Oracle of Omaha, or basically keeping up with the Oracle. This is the guy who runs one of the farms that has the highest cash reserves in the world ever. So Warren Buffett dumped shares of Amazon, Apple, and Bank of America and added one brand new stock in his final quarter before retirement. So of course we knew when he had sold Apple shares, when he sold Bank of America. But now the newest ticker in town is Amazon. So he basically reported that he sold Amazon. I believe over 70% of his position in Amazon was sold. So data is the fuel that keeps Wall Street running. A few announcements are more telling than the quarterly filing of 13F with the SEC. 13F provides investors with a roadmap of the stocks that Wall Street's savviest money managers bought and sold in the latest quarter. So the latest round of 13Fs features the last trading activity from Berkshire Hathaway's Warren Buffett, who retired as CEO on December 31, 2025. In his final quarter before retirement, the Oracle of Omaha dumped shares of Amazon, Apple, and Bank of America and made a brand new $352 million addition to Berkshire's portfolio. So the net selling continued up until retirement. So over 7 million shares of Amazon, 10 million shares of Apple, and 50 million shares of Bank of America. So the sizable reduction in Amazon lowered Berkshire's stake by 77%, Meanwhile, Buffett oversaw a 75% haircut in his company's Apple stake since September 30, 2023, and a 50% cut in the Bank of America stake since the midpoint of 2024. So while a historically low and now permanent peak marginal corporate income tax rate likely incentivized some selling activity in Apple and Bank of America, the prevailing theme of this selling looks to be valuation. For instance, when Buffett initially purchased Apple shares in the first quarter of 2016, the stock traded at a price to earnings ratio in the low to mid teens. But then, following several years of subpar physical device growth, it now sports a trailing 12-month PE ratio of 33. So it's a similar story for Bank of America. When Berkshire provided $5 billion in financial backing in the summer of 2011, in exchange for $5 billion in preferred stock, Bank of America common stock was trading at 62% discount to its book value. Its shares are now valued at that 7% premium to book. So lastly, Amazon has never been inexpensive by traditional valuation metrics, although it's historically cheap relative to the consensus cash flow estimate for 2027. Berkshire's now retired investing legend has been leery of sky-high valuations on Wall Street. So the Oracle of Omaha goes out with a 352 million bang. Although a handful of existing holdings were added to his Buffett's final quota, the purchase that really stands out is the New York Times company. So the New York Times has the symbol NYT and is tradable on the New York Securities Exchange. Berkshire 13F shows that they bought 5 million shares, which was scooped up worth about $352 million on the last day of his trading. That is on December 31st. So Warren Buffett has long been a fan of brand name companies that have built consumer trust. The New York Times brand, coupled with its modest dividend and steady stream of share buybacks, laid a solid foundation. Furthermore, digital subscriptions for the New York Times continue to climb, 12.78 million as of that first deck, with strong pricing power lifting average revenue per user and double-digit growth in digital advertising providing a boost. The New York Times appear to be firing on all cylinders. Perhaps one of the question mark is valuation. Buffett, who has demonstrated a willingness to sit on his hands until stock valuations made sense, paid an aggressive forward PE of 24 for the New York Times stock. So normally, whenever you see Warren Buffett buying stocks again, and he goes for the New York Times stock, usually you'll find that there will be a lot more investors, especially the ones that make the tour to Omaha every year. You might see a lot of them going for that particular stock. So it's not a recommendation to you. It's just a highlight that often you can research, add these to your maybe watch list, and see how normally it happens when Warren Buffett starts buying stocks, and then you get note that he has bought something. So as of yesterday, the New York Times company was up 1.49% and 2.39% in after hours trading. And if you look at the year-to-date performance, it's just picking up pace, only up 6%. So we could be seeing some more performance later in the year. So that is it from the news side. I believe now it's time we go for some technical analysis stuff, try to understand what are the prevailing market trends and chart patterns, and hopefully get to use that to our benefit to identify trading opportunities and hopefully make money from the markets. So let's see what we have here. So this is the MetaTrader 5 trading application, the app that we use for trading on desktop as well as on laptop. You can download the app from FXPesa.com. And if you prefer trading on a smartphone, you can download Equity Trader by FXPesa. It's available on both Play Store as well as App Store. Once you download, sign up, and you'll have a one-stop shop for depositing, trading, withdrawal without any delays. So checking the comment section here, I can see Bongitei is already in the house. Thank you for joining. Mugendi, thank you for joining. So let's progress with the presentation. So on the MT5, as the title suggests, there is a strong recovery in gold. So we've had 3 weeks of a very strong bearish momentum. So we saw gold drop by 21% from its all-time high of around 5,600, dropping all the way to around 4,400, 21.35% down. Then the second week, what we saw was the market making a very impressive recovery. So from that bottom, we saw the market going up by about 15% before erasing some of that gains to around 5%, and then pushing higher, closing the week up 12%. But then that didn't cover the 21%. So fast forward to last week, the market attempted to push higher, gained by 2.69%, dropped lower by 2%, but eventually ended up the week up 1.27%. So still in bearish territory. This week, we also opened with a very strong bearish momentum. So today being Wednesday, or the third day of trading, we have already seen gold dropping by 3.9%, but then the price action today, 5 strong bullish green candlestick. This is what we had earlier this morning. So this was indicative of a strong entry by buyers, which now might flip the narrative. So it's a signal showing that buyers could be coming into this market and looking to flip the narrative from bearish momentum to bullish momentum. So if this is anything to go by, then we should be potentially looking at gold retesting the previous highs. And all we can see is the market really struggling along this particular trend line, which has been the resistance trend line for the week. So from Monday high, Friday or Monday high, then Tuesday high, then today's is Wednesday high. Yes, we have already breached that particular trend line, and the market seems to be retesting. So the idea is to wait for the break and then trade on the break. So if this is the highest we have seen for the day, and then we start seeing the market coming back to it, then it might indicate that we are breaching. And once we breach, then the idea is to trade higher towards the 5,092 price action level. So that would mean we retest this particular resistance and potentially break as we seek to see more recovery towards the prior trend, which was a very strong bullish momentum. So from the daily, I know my candlesticks are not very clear, so I'm zooming in. So we've had 2 consecutive bearish days. Today is that day, but it seems a bit more green or more likely to cross green than red. So it has been quite a positive bull market as of this morning. So in both Sydney and Tokyo, congrats guys, you pushed this price of gold higher, and now we could be pushing for the highest price that we have seen in 3 days, and that could be playing out today. So as for silver, it's a similar thing. So we go to the 4-hour time frame, sharp drop. This was much bigger compared to gold. So you look at the silver's sharp drop, it was about 41%, which on the second week was extended all the way down to 47.39%. So quite a sharp sell-off. Then last week, even after making some form of recovery, we had this sharp sell-off of 14.76%. Now this week, notice how we opened with low volatility. But then as of this morning, you can see the strong entry by buyers here, eclipsing everything else, indicating that buyers are back in this market. So we should be looking at the potential extension of this bullish momentum to mark the high that we had seen last week on Friday. And that's a target of $79.271 per ounce of silver, with potential for more room for expansion. So as for New Zealand dollar, following the Reserve Bank of New Zealand interest rate decision this morning, so we had seen the market strengthening ahead of the announcement. So we go to the resistance in this particular range where the market was just moving sideways. So traders were basically buying the New Zealand dollar ahead of the announcement. So immediately after the announcement, what we saw was a very sharp drop in the New Zealand dollar against the dollar. But then the mention of a potential rate hike later in the year gave some support for the New Zealand dollar. Now we are looking at a potential retest of this area here around 0.60172. So that could potentially play out. So as for USD CAD, after announcing the inflation report yesterday, this is what happened, but then it didn't last for long. So what we saw ended up happening was the market pulling back, and now that we have pulled back, the market is potentially equal for continuation higher. So that's USD CAD for you. Our USD, one of the strongest currencies for the week. We had mentioned that yesterday we expect the market to be moving higher. So we had a false breakout, which ended up reversing and the market moving higher. And now we don't even know where we are. We are still somewhere in the center. Remember, best entry and exit points will be at the edges, not in the center. Gold seems to be going back rather than up. So there is also that potential. So it doesn't mean that just because we expect a full recovery, doesn't mean we won't get another swing here. So we could be getting, yes, another swing here before the market bounces higher. But then I really expected and anticipated that this would be the play. What we are seeing in silver here, where the market makes a run for it and then keeps pushing higher and higher. So for silver, it has really been pushing. And at some point, we'll see the reward from such pushing to break into new highs. So the 15 minutes chart looks like this after a very strong and healthy bullish momentum. So from the H1, I expect to see more upside potential in silver. So for gold, it can be quite manipulative. So even if we are seeing this sharp sell-off, at some point we should be seeing more bullish momentum. So it's a similar thing like what was happening yesterday during the session. So yesterday during the London Open, when we were doing the session, this is what was happening in gold. It was moving down and it felt like we are seeing a continuation. But then I kept insisting that we should be looking at potentially the market moving up and getting to the mean reversal point. So mean reversal would be the beginning of this candle here. This is where the big move started. So I was expecting the market to retest that area there. So that didn't play out as expected. So the market got close enough, but not exactly. And as soon as we got that, we had a sharp drop. So notice that now the market is testing the same area again, failed to break, and now we are looking at prices moving down lower. So clearly, what kind of wait and see? So this is the 15 minutes chart. This is the 1 hour time frame. So perhaps some form of manipulation, but long term, I expect to see more bullish momentum here. So trying to see if I missed any currency pair. USD Swiss franc in some form of consolidation on the 4-hour chart. Looking to break towards the upper side. In this case, dollar strengthening against the Swiss franc. So from the 1 hour time frame, clearly it's an attempt to push towards the prior high, which would be yesterday's high. USD yen still in a range, but also potentially breaching that range. It's a sideways market, so not the best to be looking for opportunities. Euro dollar, here we have had quite a good number of ranges with some breaks, but then what we saw yesterday was a break towards the lower side, a retest, and now a potential continuation, which implies that we could be headed here to 1.17806. So you look at the pound, even after their news early this morning and CPI inflation dropping significantly, we expected the dollar to continue gaining against the pound. So this was the spike, but the market normalized immediately. So you go to the H1 time frame, we know that the market already grabbed some liquidity around this area here. So this is when the pound was weak, but then strengthened later in the evening yesterday. So we should be expecting to see more upside potential for the pound USD. So from the 4-hour time frame, this was the first dip and now the second dip. And if you look at the 4-hour candlesticks at the dips, they're indicating rejection of lower prices, which means that we could be headed higher. So we already discussed New Zealand USD, USD CAD, Audi USD, gold, silver, and now oil. So oil had this sharp drop yesterday after Iran announced that they are making positive progress, but then later on found some support, and you can see oil prices moving up higher. So this was the reaction or the inertia of the premium on oil, and now that we are seeing more bullish momentum, at some point we should be looking to enter short selling positions. But for today, it seems like a bullish day. So US equity indices, we have the Nasdaq or the UT 100, which was quite volatile yesterday in the afternoon. Notice the sharp spike up and then down and then up, down, up, down. But then it ended up the day almost in the green, and today has been pushing even higher, which means that we are going for Friday's high, and Friday's high is not very far off. It's just here. So here you check the price action area. It's 24,917. The Dow is getting to a high that we have seen in the last 3 days, around 49,749. So a breach above that would likely mean that we head higher and you go 49,888 on your way towards the 50,000 price action area. So clearly, we expect more bullish momentum. Then, if the market maintains the range, then a drop back to this area here. So remember, we are still in a range. For 3 consecutive days, the market hasn't been moving. US 500 or the SP 500, we are still in this range. So we just bounced from the lower trend line and now are moving higher. And from the H1 time frame, there seems to be some form of resistance, especially when you consider that this was Friday's high, and the market is currently retesting that area. So then we have BTC, which continued trending lower as we had projected yesterday. The dollar index is slightly moving up. You look at the German DAX, really looking to breach into new highs, and one of the short-term highs is around the corner, 25,234, as the next target, since we have already breached that particular resistance. Then we have the EU 50, clearly on a very strong path upwards. So found its support around the prior day's low. And then from there, a very strong rally. And now we are seeing the market potentially reclaiming the previous high. France 40 stock market index from the H1. We had this channel, captured these. We had the sideways momentum and then a breakout here. So if you captured these well and good, there's still more room for upside. If you go to the daily time frame, then you know that the most recent high is an all-time high. So clearly, it's a market that is looking to retest the all-time high. So Swiss 20 stock market index managed to break and move higher. So clearly, a market going for newer highs, and the Netherlands 25 stock market index also showing signs of a breakout, having suffered here, unable to break into a newer resistance. And now that you've broken out, seems like it's in order to expect more bullish momentum. So as for the chart of the day, between gold and silver, which both seems to be bullish, though in the short run, gold doesn't look to be all that bullish. For gold, I would wait and see if more buyers come in around the midpoint or the middle ground trading area. So somewhere within the range of 49, 41, and 4900. If we see buyers coming in at around these prices, then that would mean we go for a buy trade. But then if we continue with this bearish momentum, then a sharp drop towards the previous low, that is 48.94, would be in order. So as for silver, it seems like this is continuing. And from the H1 time frame, you can see that we have had this trend line that has held for weeks, and this one that has held for 3 days, all coinciding around the same area, that is 74.696 price action level. And now the price is looking to extend higher. So it means that the trend line was broken. And with a broken trend line, clearly I will expect the price to move around this area here. That is $77.875 per barrel on TP1 and TP2 $79.271. So Brent oil still expected to continue the recovery path, potentially hitting the high of yesterday. So that is it for the day. Thank you very much, everyone. So I'll be checking the comment section to see if there's any questions. Answer them as we approach the end. So good question on fair value gaps on gold. I wonder what time frame you're talking about. But I don't know if the market attempted to reverse here, then went up, didn't quite break the previous high. I don't think that's big enough liquidity grab. So potentially, what we are looking at here is an attempt market that is looking to retest the lower side before moving higher. And notice our trend lines are not perfect, which basically means that when drafting this particular trend line, it could be also here. And if it's here, it means that we already got the breakout, retest, and a continuation, but that is not playing as expected. So perhaps another retest and a continuation higher. So there is a strong likelihood that this bullish momentum since all morning wasn't for nothing, and we could be seeing an extension of the same bullish momentum. So for silver, we are very close to another potential break. Remember, the PIP value in silver is 5 times that of gold, which means that if you trade 0.1 gold lot size, then for silver you should be using 0.02 to achieve the same results. So that is it for the day. Let's see if there's any last question. The QR code is very important, especially for someone who wants to register for our sessions quickly. If you want to register for a trading account, that's why the QR code is there. You can use it for your benefit. So is gold related to US oil in Antwe, be it a technical or fundamental perspective? They relate in several ways. On one side, they are both commodities. So they also are bought and sold in commodities markets. So they are influenced by demand and supply. Right now, the biggest buyer of gold in the world is China, and the biggest buyer of oil in the world is also China. So Chinese fundamental or news or economic data tend to impact gold, and they also impact oil. And many other core relationships that keep developing every now and then. For instance, a safe haven play might see investors rushing for gold if the safe haven is, for instance, to escape inflation. Then investors go for commodities like oil. So they are quite similar, but not the same. So UJ, I assume you are talking about USD JPY. Yes, it's setting up a potential break. It hasn't happened yet. So normally, if we have a clean break and closes above the high of yesterday, and that candlestick happens to be strongly bullish, then that should be your entry point to go for a buy trade. So some candlesticks require confirmation, some others don't. It depends on the size and impulse of the candlestick. So question, does the Forex sentiment still work? Like today, before gold recovery, the sellers had an upper hand at 34%, yet the market bought. Yes, if you look at most brokers' websites, they will have a number published showing you the number of traders who lose money in the markets. So that number might be 10%, might be 80%, 70, 85, 90, depending on the broker. And then if those same traders are the ones that are yielding the sentiment, so if mostly they are bullish on gold, most likely they are wrong and gold is going downwards. So if you see a very skewed market where retail is on one side extremely, then the market will most likely be moving on the opposite direction. So if from your comment here, the sellers had an upper hand of 34%, that is in gold, then you expect the market to be moving higher. And of course, you already saw it happening. So I don't know whether you're using the IG current segment or which one you're using. Could be my FX book. They also have sentiment data. So make sure to check it out. My FX book usually has a lot of good sentiment data, detailed. This way you're able to tell where the market might be headed next. So that is it for the day. Thank you very much, everyone. This has still not convinced me yet that it's bearish, that is gold. Good chance that we see some form of Judas candlestick and the market moves higher. So that is it for the day. Enjoy the rest of your day. Thank you for your likes, retweets. Thank you for sharing the live sessions, for your engagements in the comment section, and for signing up for this Saturday event. We'll be having a debate about trading on a prop firm versus trading on a live account. We'll also be having a panel of experts discussing various markets, including the Nairobi Securities Exchange, also discussing offshore stocks, trading in Forex, indices, as well as commodities. So you also get a chance to network with other traders. The session is free of charge at ALX Kenya restaurants, and that will be on Saturday from exactly 9 a.m. So make sure to register and purpose to attend. That is it. Enjoy the rest of your trading day.